advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional. Hi there, everyone. Welcome to this week's edition of Bulls versus Bears. I'm actually on my own this week, so it's no Bulls versus one Bear, I suppose. But episode 88, the stock market is not the economy, is what it's entitled. As you can see there, the big news of the week was the government shutdown in the US. So. The market really just continued to rally overall. So we're just going to have a quick look here. We did some stats on, all the shutdowns since the 70s. There's been 15 or so since the 1980s. The longest being the last one in 2018. And look, it's kind of over Christmas. So, I mean, it's more of a holiday than a shutdown, is it not? But look, market was up over that period, and then over 12 months was up as well. It's up more than 50% of the time, and then over 12 months it's up, more than 86% of the time. So, and really what I think this is to do with is the top 10 stocks in the S&P 500 now are like, well, this is the latest stats from 2024, but it's over 40, it's well into the 40 percentile. And as you can see in history, like back to 1880, 28% is about as high as it gets. So this is pretty extreme here at the moment. I think it's it's somewhere in the vicinity of about 40% odd. So, and I think the reason why the economy, the stock market is not the economy is, particularly the US economy, is if you go and have a breakdown of the companies that are essentially the largest companies in the US. They're highly global now, basically. So you got Apple's global revenue at 60, Microsoft 50, Alphabet at 54, Amazon at 44, Meta at 50, so Tesla at 55. I mean, Berkshire Hathaway's 25, but realistically, I mean, it's an investment house. So you wouldn't even really bother counting those guys. But I mean, I think that's where they're a little bit immune to those previous historical stats, and then you add to that the fact that we've got an AI revolution happening, or industrial revolution style event happening with AI. You kind of understand why this thing just seems extraordinarily bulletproof at the moment. And whilst I'm always tagged as the bear, I've been fairly quiet of late in terms of. I can see why the indexes are hanging in there just due to the weighting. I mean, if the index was equally weighted, as if not weighted by the size of the company, I think the bearish case would be right. But these guys, the weightings of these companies at the moment, they're so enormous and they're doing so well, and they're essentially getting all of the world's business in a. Usually you had multiple companies in multiple countries all competing for technology or an industrial revolution style thing or whatever. These guys have got the whole world and no one else can get in. So, and you haven't really started to see the flow-on effects for any of so these guys are building it out. They've got massive cash piles. They're really the first ones to monetize it in any way, shape or form. And they're not monetizing it particularly well, but the stats are quite frightening on how little money has been made by other companies. But because these guys are such a huge, I mean, you have a look at the market map here, and we just go through to the US market map. And hang on, we've gone too far. And essentially, it's the size of the squares on those market maps is basically how big a weighting it is. So you've really had you've got to have a whole sector almost get smashed to even make the same difference as say Nvidia. I think Nvidia is bigger than about 7 or 8 global sectors put together, of all of the companies in the world in those sectors. So, that. Yeah, and I think the top 10 companies in the world or something are about 26, about 25, 26% of the supposed total money supply in the world. So, you know, it's where it's quite dangerous to use historical stats to go and measure overvaluation, because it's a very, very different world to what it used to be. But equities this week, really, we had a pretty reasonable day on the Aussie today. We had the healthcare sector continue to go pretty well. Clarity, one of my little radio pharmaceutical, Stars was up about, I think, 20 odd % today. Last time I checked. I'm sure that people will wake up in Telix soon enough, and we'll start to see that head higher. I think that's got probably about 80% to the upside once people wake up to themselves. We started the week by actually just taking a little bit of profit in our precious metals here at MPC and switching into healthcare. And Pfizer, the CEO of Pfizer, went to the White House and bent the knee and kissed the ring and did whatever he needed to do, and said he was going to discount some drugs to Medicaid. And all of a sudden, Trump's been appeased, so he started backing off a little bit on the tariff threats and all this sort of thing. So it's made for a very positive week in the healthcare sector. So yeah, really, we saw the likes of CSL bounce out of its lows as well. CU6 is just on fire. I think that's, we're back above $5 or something now. Like I said, TLX will make a bit of catch up, but the haters are still hating. But yeah, CSL as well. Roughly around was around the 206 mark overall. So. And we're just having a little bit of a double check there, and trying to get a bit of an idea of where things are. But yeah, so where do we have CSL finished at back at nearly 208 today, and up 19% for CU6, and we started. I think it started to see a little bit of buying in Tilix, but Drone Shield and EOS in the start of the week as well shot the absolute lights out. I think they were up 20% at one stage. The reason we've got the webinar for the security super cycle coming up on Tuesday that I'm running, and the reason that I'm here solo this evening is I threw it out there to the Drone Shield CEO. To do an interview for the webinar, pre-recorded interview for the webinar, and he agreed, but he only had a certain hour and that he could do it, and so I just come off the back of that and just got that done, and the boys have families and things like that. I'm not gonna accuse them of being on their yachts today. They've been working very hard, but it was a little bit of a scramble, but it was super interesting. You'll have to watch the webinar or register for the webinar to get a bit of a look, but there'll be some shorts. And then for the people who register, you'll get the full 25-minute interview, which, really surprised me, actually. I was pretty bullish. The stock, we don't hold it at the moment because it's at 4 billion market cap, but it's they're doing some pretty exciting things, and there's stuff coming up in the future. And the picture of these guns here, that stuff's like 2 or 3 years old. He was talking about all sorts of AI initiatives, how they're, the civilian market, all sorts of things. He's a really interesting guy, Oleg Vornik, and it was a really great opportunity to have, a bit of a chat. Didn't do all the boring stuff and ask him about revenue projections and crap. I just stuck to the themes and all the cool tech that they're doing and things like that, all the stuff we actually want to listen to. And, we can go to Yahoo Finance if we want to know what the forward PE is, or particularly if you want to go to sleep. As I mentioned before, that's the CEO of Pfizer there, healthcare sector. The healthcare sector overall did jump up quite a bit. over the course of the week. I think we bought IXJ, which is the iShares Healthcare ETF, on Monday or Tuesday. I believe it's up about, to be up about 6 or 7% this week alone. First bounce we've seen in a long, long time. Signs of a resilient consumer still. Nike actually shot the lights out, beat expectations. Very, very fast. They did I think it was only 2 quarters ago, they had a shocker and they brought back an old CEO and they put a new plan in place, etc. Sort of like the Disney playbook with Eisner, and they've executed like so fast. It was actually quite impressive how quickly they've turned around and took the market by surprise a little bit, because in consumer industries like that and branding and things, it's not usually a 1.5 quarter turnaround story. So and Tesla as well. You're probably going to get bored with me talking about Tesla. So and I did promise on last week's webinar or the week before to show, if I got my technical skills up and running, to be able to show you guys a couple of videos of what they've got going on there at Tesla, which I've got coming up in the next few slides. So self-driving cars and things. But we've been doing constructing a AI robotics and AI automation investment at the moment. There'll be a webinar next month as well. So I've been down the rabbit hole on Tesla. They announced that the Gen 3 Optimus will be coming up sometime this month, and they're getting more and more self-driving. So I'm just going to show you here, and you can see this was a video, because a lot of people haven't really seen these things in action. So you can see the screen in the middle there. And it's obviously got the radar around the cars. So this guy this is a fully operational in Austin, Texas. He went for 2 rides, 3 miles, 2 minutes, $1.30 a mile. So, and then he did another ride, which was about 16 minutes at $4.62, about $1.27 a mile. So Uber, at the best possible price you'll get for Uber, is $1.06. But it's anywhere up to 2 miles. That doesn't include booking fees and this fee and that fee. So, and look, these cyber taxis aren't at scale yet. So, there's no incidents. Obviously, it really did see the it handled traffic. It changed lanes for a bus. It turned a corner and there was oncoming traffic at a stop sign. So I just found it really, people have said they've sort of, they would freak out, but I mean, it's I've driven a Tesla and used the beta tested auto drive. You got to keep your hands on the wheel, but it is scary the first time you sort of give control over. But a lot of cars have got lane assist and things, and this is the other thing as well. I know I didn't realise the music was going to come through, but this is their unboxed Cybercab. So the process was validated, and as you can see here, the unboxed process a little bit different to the traditional. But what it means is essentially that they're going to start production via this method in 2026 in Texas, and essentially the build time is reduced by 30 to 50%. So we're talking about a Tesla Cybercab and then other models as well, being produced in 33 seconds. So he said that, at 2 million vehicles, it's about a $25,000 cost saving just in the manufacturing alone. So, they're a premium model, and they're not going to lose. Supposedly not going to lose any of the any of that premium bits and pieces, but the way that in which that it's pulled together, and then at scale it can be up to it's about an 8K saving per vehicle, and then it can be up to a 20K saving per vehicle once it gets to scale. So all these stories about, I've driven both a BYD electric, a Mercedes electric, a BMW electric, and one of the MG electrics, and I've got to say that Tesla, by just absolutely streaks them. In terms of the auto driving, in terms of the interface, in terms of the ride, the finish in the car, etc. It is just streets ahead, and even things like the battery, where you actually get an accurate estimation of your range and things like that. So that, then they're going to be able to start. They're going to be able to start to compete with the cheaper models. So I mean, and that's just, again, it's just Elon. Like that patent's been in for. I mean, I know it's called Unbox. Excuse the pun, but he thinks outside the box, obviously. And they've at the moment they've got some of the Tesla gigafactories are currently 80% run by Optimus robots. Even just the prototype third gens. So the fellow who's in charge of that division said there's some exciting stuff going to be announced this month. I don't really know. I think because I've been looking, my social feeds is now filled with Tesla stuff. I've got to probably back it off for a little bit because I'm now just getting Kool-Aid flooded, in my direction about Teslas. I mean, it finished unchanged for the week, but there's been a lot of positivity around it. I mean, it is expensive, but I mean, some of these addressable markets are just off the hook. Like, we're talking, self-driving cars is billions, it's trillions of dollars within the next 10 years, and they've got a clear lead. So NVIDIA was up this week, not for any reason, but just because. There was no real news there. Same for Meta being down. As you can see here, I was talking about the healthcare sector before. Eli Lilly up 11, Merck's up 12.5, AbbVie up here at 7 there. That whole sector. Johnson and Johnson's only up 5, but to be honest, it wasn't as hard or as fiercely dealt with as the rest of them. Pfizer was up 12.5% as well. So. And having a look at that healthcare sector, I've actually made that trade of the week this week, and which we'll get to in a little bit. But you'll sort of see that there's just been a broader bottom left, top right, grinding higher trend for that ETF for decades. It rarely ever goes down or south. So probably not a bad opportunity, and still not too late. I wouldn't have thought either. Government shutdown brought a bid tone to gold, silver, copper, platinum, and stores of value, and Bitcoin obviously as well, which had been doing a bit of a counter in the previous weeks, but just really played a big catch up to try and reassert itself as digital gold. But look, gold was still up 2.6. We're record highs. Silver up 3. I mean, that's probably one of the best 2 or 3 week rallies in silver in God knows how long, since 2011. But prior to that, probably ever. So I'm pretty happy that Constructive has had a bit of a breather. Uranium keeps heading higher on that thematic. Lithium as well. So and crude was down 7%, but I mean that'd be. I would say I'm pretty surprised with the copper actually, because this is going to cost the economy some money, this shutdown, and apparently they all went home for a Jewish holiday, so they all get paid, and their soldiers and government staff don't get paid. Which I think the problem would be solved a hell of a lot faster if Congress didn't get paid until they got it sorted out. But that's the way of things. But yeah, I'm really impressed that copper's managed to stay high, because those cyclical metals, this is going to hurt the economy. We're talking 100 to 300,000 people losing their jobs. So, and Trump's actually been criticised quite heavily for almost reveling in it, and now, and I think the general press and general public are starting to turn on the Republicans, because it conveniently suits Trump's arguments to get the budget in check and to fire people, and it's not his fault. And he thought he was going to get away with blaming the Democrats, but people have started to wise up a little bit overall. So we did trim some of that precious metals this week, but the reality is that we were, there's overweight and there's underweight and there's neutral. We were morbidly obese, like precious metals, and and we've had an extraordinary run, and we've got leverage strategies in silver and platinum, leverage strategies in gold and silver. We've got gold miners, we've got silver miners, we've got copper, we've got the copper ETF as well, which is up 26% in the last 3 or 4 weeks. So just more so trimming from a risk standpoint than believing it's over. Because we've made quite a lot of money on that trade for the last 18 months. It's but I mean, don't get me wrong, we'll keep playing the hits, but there is a certain point where it becomes prudent to start to diversify, and really we were just happy to let those trades run until there was a better alternative. And healthcare I'd earmarked for quite some time. Because it is defensive and it is cheap. And then as soon as we started to see that turn in healthcare, we made the switch. And I believe, precious metals were probably, it's around about where we sold them. And then the healthcare's bounced up this week. And we topped up some CSL as well as buying some Clarity earlier on in the week, which is, I'm not entirely sure what's going on in Clarity, but someone's getting real stuck in. So yeah, but I mean, overall, normally this is JT's domain here. That was another thing. Between Tesla and the silver bulls, I don't think I've seen anything else on Twitter this week. This is pretty. Sorry, people. Gold bugs is about it. So it's been absolutely dominating the feed. So. Congress will come back next week. I doubt that because there's a Jewish holiday, they won't get a solution over the weekend. I wouldn't have thought, and I would assume that there'll be something along the lines of Trump engineering a situation where he gets to look like the hero, I suppose. So this is where this is why we're looking at healthcare. I mean, this is a 10-year chart, right? So and that's going all the way back to 2016, and so you can just see here it's breached this. It's breached this long-term moving average, once, twice, and a little bit here at the moment. That's on massive trade uncertainty and tariffs and changing the rules and things. But normally an incredibly solid trade. And so the IXJ is actually down 5% for the last 12 months today. Back to October last year, and the Nasdaq's up at 25% odd. So lagging by 30% there, and so you can see that underperformance, and you can also see, when you step back and see the forest for the trees, how good a trade this is on the long-term basis. So, and I don't look at this point in time where, I don't think it's too late. That's for sure. And so, that's one we've used in the past. HLTH, drug, they're all pretty good. They're all pretty the same, to be brutally honest. We've just found IXJ is a more consistent performer. Kai went and back tested all that, and that's the one we generally do put in into our ETF Elite portfolio that we do for people who just want indexes and ETFs. So it was, and I think he did that over a 15-year period, and it just seemed to outperform to the upside and be a bit more bulletproof to the downside. We'll have to ask him what that's all about next week, because I cannot remember for the life of me. So fear and greed, we're 52, 51. And yeah, look, forget fear or greed. This market's bulletproof. So one thing that is interesting though is, and credit spreads is something you got to watch out for. And before the GFC, credit spreads went to a record low before they spiked straight out. It's a good leading indicator. Junk bond demand has fallen in a hole, and that's gone extreme fear. That's a problem. That means that credit is getting more expensive at the riskier end of town, and that means people are, it's a very good sign that people are a little bit concerned about, potential future of their economy. Safe haven demand is in greed territory, as in there is none. Put call options is still in extreme greed, and the stock price strength is in the greed section. So I would say, it equals a neutral, but I would still say that stock investors are I would say, borderline extreme greed. And I think bond investors are always ahead. And I don't just say that because I'm an old bond investor or bond trader. But the people that are involved in the bond market it's like they're seasoned professionals, so they're watching every nuance. They're trading for single basis points rather than worrying about whole cycles at times. So I quite often say equities is like park football. The bond traders and the derivatives markets, that's like that's Super Bowl sort of stuff, and very closely watched. So they sometimes they'll panic about nothing as well, but the equity market just breezes through on a long term basis. But and ignorance is bliss quite often. But yeah, I think that's a warning sign for me. In terms, and we probably just need to keep a pretty close eye on it overall. So, I think as going back to these government shutdown things, I mean, historically we've already rallied a little bit on the back of this, which is the stories, and it was quite incredible. The stories turned from, oh my God, there's a government shutdown, to, oh, that means we're going to get more rate cuts then. Sweet. I think that's going to wear pretty thin by middle of next week. We do have a public holiday in Australia. I believe the ASX may even be open, to be honest, because I think it's only Labor Day, so because it's not a public holiday all across. And we've got daylight savings starting over the weekend as well. So the US market's going to shut at 7 a.m. now and open at 12:30, which and then once they go off daylight savings, it'll go again. It'll be 1:30 and 8. So we'll get more of the morning podcast will be a bit more live because otherwise I'll never get it out. So, but overall this week, look, I'm genuinely surprised at the market's ability to just keep powering. And that last government shutdown cost $11 billion. The stock, while the stock market isn't the economy, and as I said at the start of the pod here, that that there are reasons why we're staying up here. These disconnects don't and cannot last forever. So it'll be interesting to see how it plays out. I was a little bit bullish last week, and I was a bit concerned about, but I've been looking for that government shutdown for ages. Probably going to go. I'll go with a little bit bearish because I just think I think there's been too much positivity in the face of poor announcements this week, and there's no earnings next week. It's basically the last week before the banks will start, except BlackRock's on Friday, which is the largest fund manager in the world next Friday. But the following week we start a new cycle of earnings season with the banks, and then the 2 following weeks we'll start to get the Mag 6 and the Mag 7 drip through. And it will be interesting to see how well they've gone overall. And so, if anything, I'm pretty damn neutral next week, I've got to say, because people are going to, I would say that they're going to be, there's an excuse to hang in there, and we're not going to get any economic figures either next week because the government is shut down. So no payrolls tonight. So not a bad weekend to have a long weekend. So we're just unknown as to what's going to happen with these economic numbers now. So we've got a raft of central bankers speaking next week as well, for Japan, Bank of England, ECB, and the RBA and the Fed. They're government employees. Who knows whether they fulfill their commitments? So, I would probably. I'm sitting on the fence this week, realistically, right on that neutral needle, right there. So, because it just, I can't, but I definitely can't see it rallying. If I had a gun to my head, I'd be short. And we'll see how we go from, see where we go from there, because the Santa rally is looking increasingly almost impossible this year, because it's usually born out of September, October weakness, and the fact that we've rallied. I'll do some stats on that for the podcast next week as to when we get positive September, Octobers, what, if that does affect the Christmas rally. That'd be interesting to have a look at, actually. Look, sorry, folks. Look, I'm glad I've managed to punch something out. Hopefully you all registered for the webinar on Tuesday, and you'll get the full interview with the Drone Shield CEO, Oleg Vonik. Super interesting guy, super lovely guy. Can't thank him enough for doing that, doing that for us. And we'll get to, a couple of really good insights there, which, makes the eye-watering $4 billion valuation, a little bit easier to choose. We'll chat again next week. For those of you are still broadcasting in the mornings, the Global Alpha podcast will be released Monday as well. And we've got that webinar on Tuesday around the defence sector and super cycles. So, hope everyone has a great weekend. For your NRL fans out there, go the Broncos. And, we'll chat again next week. Cheers.